So welcome back to my Hargreaves Lansdown portfolio update for August. I can't believe another month has gone by. It's super hot outside, so let's get this one done nice and quick. As a recap to last month's update, this account was in the red overall and I was sat around £41,250. Now, if this is your first update, just remember that these are my kind of individual stocks and shares, which I keep way outside of all of my index funds, which are mainly held in my Vanguard portfolio. So this is where I get to dabble in a few stocks and shares and try and beat the market, as difficult as that is. And just before I jump into all those numbers, July has been an absolutely crazy month in the stock market. And actually, if we take a look at this, it's been the best month in the stock market since November 2020, which is really crazy. And remember how we always say that some of the worst months in the stock market are very quickly followed by the best? Well, potentially this has just happened again. And also, before we jump into the numbers, we have some breaking news. As I film this, I've just seen the US inflation data come out at 8.5%, which was actually lower than expected at 8.7%. And that does suggest that the Fed in the US probably won't have to raise those interest rates as much or as quickly as they were expecting. And of course, the market has now rallied as I'm filming this, and we're going to see some pretty big changes to the portfolio just today. Okay, let's jump into the portfolio now. I'll put everything up on screen for you. As you can see, wow, a crazy day. We're nearly at a four-figure day move upwards, which is always nice to see. And of course, I hope that doesn't actually change by the time this one goes live on Friday. First things first, elephant in the room, there is a stock missing from this account, which I updated last month. You have Evraz, the UK listed Russian mining giant, which unfortunately, of course, was had itself suspended from trading for quite a while now. And there was a letter that came through from Hargreaves Lansdown as a digital message asking shareholders if they wanted to change their shares to either a paper format or basically just have them sat there and wait and see what happens. I've actually decided to go down the paper route, so I will actually get some physical shares. I've never actually seen one myself, so that will be very interesting over the next couple of weeks. I did put a community post up about this one, so thanks to everyone who responded. Definitely let me know in the comment section below what you're doing if you are an Evraz shareholder, but really, who knows? At the moment, it's just a big fat L in the account, and ultimately, if I can get any kind of money back from this, that would be great, and even potentially some dividends, because the company is going to be sat in quite a bit of cash, which it did have promised to shareholders, but who knows what's going to happen in the future with that one. Anyway, going into the rest of the holdings, of course, I'll always touch on Baillie Gifford American, which is slowly but surely creeping itself back up there. Again, as we discussed before, this fund has got lots of those kind of hype and fast growth stocks, which went crazy over the last couple of years. But what's interesting, we have actually seen some really good news over the past couple of weeks with some of the holdings in this account. Of course, Tesla makes up a really big position, but also Trade Desk, which is the #1 position, has actually seen its share price increase 35% today. As I film this, again, anything could change by the time we get around to Friday. They've had some decent earnings, and of course, they've just been completely bumped up after all of this inflation data news. So clearly, the stock market is having a good time. Next up, a contentious one with everyone is Deliveroo. Now, I know I was pondering last month and saying, should I just sell this stock? To be honest, because it's such a low amount of money and actually managed to get an IPO allocation of £1,000 here, and it's down to, what, 250, nearly £300, I am actually going to sit on this for probably 6 to 12 months, just to see what happens. I do honestly think that this stock is probably something like a takeover target for someone with that big network and that big brand. It's not going to be profitable anytime soon. They spend all of their money and they lose a hell of a lot of money trying to market and grow. It's not really going to make any changes. And to be honest, guys, I'd probably rather just save the £11.95 trading fee to sell the stock and then reinvest that money. It's probably going to cost me too much. So I'm just going to leave this one in the account for the next 6 to 12 months and we'll see how it goes. It's quite a volatile stock, so it does actually move up and down quite a lot in any given day, but because it's not a very big amount, it's not really going to make any dent anyway. But we'll keep it on there as a reminder not to mess around pre-IPO. And just working our way up with the losers here, of course, Unilever, the single most disappointing stock that I hold, which doesn't really just do anything at all. Meant to be that slow, steady grower that pays a dividend, of course, in that consumer spending market with loads of different brands. But really, it's been very, very disappointing. It should be a stable beast long term, but I clearly bought it at a very, very bad time. And as the rest of the market today is completely rallying, this one is one of the only ones in the red. So massive face palm for that one. But look, it's a long-term hold. I won't be doing anything with it anytime soon. Now, iShares Clean Energy, this one has been on a huge ride. In my account at one point, it was down, nearly 40%, I think. And it is actually my largest position. It shouldn't necessarily be that to reflect my convictions, to be honest, but I did FOMO into this one back in the day when we had that tear. I saw a dip in the fund and I was like, right, I'm going to take my chance because clean energy is certainly the future, and all of the holdings companies, all of the different stocks that made up the fund were going through the roof, so I wanted to jump myself in. So this one is nearly now back into the positive, and we've seen a couple of nice little catalysts actually. So you would have seen in the US, of course, that they've just passed a new bill toward that renewable and clean energy, and that's a huge amount of funds which are going to benefit a lot of the companies inside of this fund, namely companies like Enphase, of course, which saw some good earnings recently as well. They're making new all-time highs, which is really, really interesting, and other companies like Plug Power in here too. So no doubt in the long term, again, like I've said before, I have high hopes for this fund. But as a reminder, of course, any of these kind of thematic funds or any of these actively managed funds, it is really hard to beat the market in the long term. But I do think it's got a decent chance in a specific niche area that does differ from the wider stock market. So I'll keep you posted on how this one goes, but touch wood, we're in the right direction now. Now with those big losers out of the way, it's always nice to talk about some of the winners. And actually, because the month has been so good, we've actually seen a lot going in the right direction. Now, it's really nice to see my two newest positions in the account. That's PayPal and Google, which I bought, if you remember, when I sold my BP stock, actually both in the green. And again, I bought them at pretty effective valuations, I think. And I think the upside now is definitely a lot better than any downside. So PayPal, of course, has been beaten down massively. And the same with Google stock. Both reported earnings and both were fairly solid in my opinion, and I think the market reacted to them pretty well. PayPal had some pretty nice movement going in the upside because I think people were expecting them to be a lot worse, with people spending a lot less money and businesses taking in more, but actually they did beat expectations. And Google did miss on earnings a little bit, but then they did beat on revenue, so they are going in the right direction, and I really don't think a company with this quality and that kind of moat is going anywhere. So touch wood, we've actually got a nice little position here, and slowly but surely I think these two will move up the chart very, very quickly. Now moving up to the bigger tech names, do you remember AMD in my last update was literally only 0.5% up, and it's crazy what just a month can do. It can fluctuate massively. Any stock can fluctuate massively just within any given year, any given month. So just be aware of that. If you're going to start picking your own stocks, that literally anything could happen in the short term with the price. And the key thing for you, I think, as a stock picker is just making sure that you don't react to those changes by doing anything stupid. But anyway, here's where we are at the moment. Again, more recent earnings from this company. Earnings were really strong. They managed to beat on both the top and the bottom lines, but they did soften their forecast a bit moving ahead, so the market was a little unsure here. And by all means, it's definitely not a cheap stock. There are some big expectations here. They are expected to grow, and they do have to grow a lot year by year to justify these numbers, but I think they are kind of taking the market and taking the industry by storm, showing Intel especially how to do its job. Some massive progress here in lots of the space, and the technology and their underlying chip technology is certainly fantastic, and I don't think Intel, their biggest competitor, really is anywhere near them at the moment. Moving on to Apple, the big boy, the most profitable company in the world. Again, they had a solid earnings, slightly lower revenue number, but then on their earnings they did actually beat. Now they saw some of their costs increase just like lots of other businesses did, but overall there was no huge drop that people would expected. And I think the market was thinking high inflation, stagnant growth, big company like Apple, which sells relatively high priced stuff, you know, your iPhones, your iPads, your high-end devices like your MacBooks. If you're going to have to cut back on anything as a consumer, those are probably going to be some of the first things you'll have to get rid of, and you maybe not upgrade to the latest stuff very, very quickly. But as we've seen, not necessarily. They showed some very, very strong numbers. Again, it was all about expectations and reality for this earnings season, and they've held up pretty well. This is a brand that pretty much keeps on delivering. Now, Nvidia, another one of my chip companies. Now, this one's been a little bit more disappointing here because their earnings are in a couple of weeks, but they have actually pre-announced earnings because some of the results are pretty poor. Now, of course, we've seen a big declining in the gaming side of the business. Personally, I don't think there's a massive surprise here because, of course, as you might know, a lot of the crypto miners were using their chips and their graphics cards to do all their crypto mining, especially for the likes of Ethereum. Now, the problem is, of course, that is now moving to a proof of stake model. As they've seen a massive price decline, of course, it hasn't been as profitable. So now in the market, there's a load of these 30 series graphics cards, or the 3000 series graphics cards, I should say, like the one in my computer behind me, and they're now much easier to get hold of. So unfortunately, they're in a bit of a glut where they're not able to sell these cards for crazy inflated price anymore, and we're kind of back to normal. However, on a positive side, remember that's just one part of the business. Data center is definitely the shining light here, showing a huge growth. I think it's 61% for the year. So that does show that the big companies out there using NVIDIA chips for processing and things like AI and all those wonderful big sky thinking projects are actually spending a lot of money, because these things are not cheap at all. So again, maybe a slightly disappointing quarter, but of course, don't forget about the macro backdrop and the wider economic circumstances that we find ourselves in. The technology of NVIDIA is fantastic. It's very, very hard to to compete with them at the moment. They have the market leading product, and I think all the areas that they're pushing into are going to be very profitable moving forward. So again, long-term hold, just like with all of these. I'm not an in and out trader, and I put my money where my mouth is too. Plus, I don't want to pay £11.95 to do any of those trades. So that does stop me from playing around as well. Now, the last two here, Legal & General, this one always continues to surprise me because it's a really solid business that generates really nice dividends, but also increases very nicely from a capital perspective too. So you can see I'm up around kind of 44, 45%, making it my second largest holding. And of course, it does that while it also produces dividend too. Now, they also just announced some latest results. They were really, really strong and have another dividend coming in on 26th of September. And that's also been bumped up slightly too. So there's not much more to say on this one. It's a really impressive UK beast, continues to be very, very strong. Great management team at that business. And of course, what else do you want? Fast growing, lots of cash flow, and of course paying a dividend too. To be honest, some other stocks could learn a lot from Legal & General. So again, long-term hold, looking forward to this one to be one of those steady compounding growth companies. And finally, still the largest gainer by percentage, of course, is the EV maker or technology company or software company, whatever you want to call it, is Tesla. Just in the news recently, you may have seen breaking news today that Elon's actually been selling chunks of his shares after that big event that he did with shareholders. So does that suggest that the Twitter deal potentially is going to go through? It probably will be, I think. I think we're going to see some sort of deal be constructed here. Who knows what price they end up settling at? I do think it's a big distraction for him. I do think it's a terribly huge amount of money. I really can't see this as a great investment. I think really you should just be investing all that money back into the business and keep growing it, because shareholders have a lot of expectations for the business. As you know, everyone wants 40% or 50% growth year on year, and that's going to require a lot of money, a lot of factories, a lot of R&D, and a lot of new people. Anyway, who knows what's going to happen? Either way, the inflation data certainly bumped this one up today. As you can see, big moves up. It was up nearly 4%. When I actually record the screenshot, I'm maybe be up less, or who knows. But again, as a long-term holder, I'm no major bull. I'll still take the gains and just be careful with my allocation here. You don't want it taking up a huge part of your portfolio, at least in my humble opinion. Anyway, that's all of the update. Thank you so much for watching. Remember, you can follow all of my portfolio updates on my portfolio update playlist, and watch out for new ones later on this month too. We'll have Vanguard and Free Trade coming in just over the next couple of weeks. So hopefully we'll see some green. And is it now the bottom of the market and are we only going to head up? Who knows? I'm not going to make that call. But anyway, thanks so much for watching. Drop me a like, subscribe for many more, and as always, happy investing.